Good afternoon, traders. Hope everybody had an awesome Labor Day weekend. Welcome to the More Analytics Afternoon Energy Podcast for September 3rd. Okay, we're going to start off with the natural gas. Had some big swings today. Trade below 228.10. We're under pressure. We've seen 260 ticks of that so far. And on 822, we also left the medium-term bearish reversal above that I said we warned of a likely run for 199.10. We've come shy of that. We only got down to 202.10 so far and been chopping around upwards a little bit here. Decent trade below this formation right here, which is going to come in at 203.40 to 203.30. We'll project this downward 130 ticks, 150 ticks minimum. But if we break below there decently and back up through it decently, look for decent short covering to come in. But probably not lean against this as a short, because this would also warn that this is in the last stretch of this move down here, and there's likely going to be some exhaustion levels down here. So I think a break below that line and decent break back above would be an excellent opportunity to be long. This formation up here is a bullish formation. If we break above there, that's going to project this higher. That's going to come into 234.90. Minus 0.3 of a tick per hour, starting at 6 o'clock p.m. Eastern Standard Time. That would project us upward at least 350 ticks. There is also a significant formation down below I mentioned last week down here, and a decent break below there. This comes in at 197.50 tomorrow. We'll project this downward 360 ticks, 380 ticks minimum, $1.40 plus maximum, which would be a significant part of the market cap, being that it's trading at 220 right now. All right. Bear with me a moment. And just on a short-term basis, I think the trade back below here at 220.20 to 220 even will likely bring in pressure. Okay, crude oil, big down day today. After gapping lower. We've been bearish in general from 119.15. We've seen 55.51 of pressure. A lot of other bearish formations in here. More recently, the decent trade. Hold on a second. It's on hold. This break below this formation right here projects this downward. That came in at 71.98. And that projects this downward $5 minimum. About $9 plus maximum. If we were to break back above that line decently, that would warrant a decent strength, likely for days, possibly weeks. That comes in at 72.01. 72.01 plus 0.2 of a tick per hour, starting at 6 o'clock p.m. Eastern Standard Time. That, if that happened, that would also set you up for a nice long to ride up to this next level here, which was another bullish formation. I would also note, I'm just going to skip around here for a second. I don't normally jump to the spreads, but the D spread here, we have been bearish for multiple levels. Bear with me one second. This is from the D spread in the analysis that I'm sending out this afternoon. But we held exhaustion above at 611 and rolled over 355 ticks. And just recently right here, the break below 295 projects us downward, 200 ticks minimum, 480 ticks maximum, which is a big move for that spread. And it's a very significant formation, well formed, coming up through here. If we were to break back up through that tomorrow, which is going to come in around 295 to 296 tomorrow, that would warn of strength in the complex. So I'd be keeping an eye on this and also keep an eye on the outright crude to see if they break back above there. Outside of that, I think this could really start coming off. So we'll have to see. Certainly had enough consolidation in here. Okay, and in the RBOB or unleaded gasoline, this also came off hard. Again, that's why it's so key to pay attention to these negatives and positives in here. I think you made far more off of that. Let me just double check one thing. Yeah, just a, for instance, seeing that the RBOB here was negative as opposed to the heat, which was the equal, and the crude, which was the plus. The RBOB came off 1,100 ticks today, whereas the crude only came off 314, and the heating oil only came off 705, meaning 1108. That would have been the equivalent in the RBOB of coming off $4.65 in the crude, whereas the crude only came off $3.17. So another $1,500 per contract, with your risk being relatively the same. Okay, so I'm taking a little delving off my normal. And the RBOB also broke below this formation, which projected it lower. Let's get back up there for a second. We've been bearish from multiple levels up in here. On 827, we left a minor bearish reversal above. And from that open at 212.42, we have come off to 196.48. The trade below 207.19 projects us downward 5 cents minimum, 23 cents plus maximum. And we've already seen a good amount of that, easily taking out the minimum of 5 cents. So that still has a ways to go. If that was to rally hard for some reason to come back up and take these out, then that would change it to bullish. But okay. The heating oil also came off hard. This broke below this formation. I did not have this formation on the AM analysis, by the way. But it's key to know that it's there in case we break back above it. The heat, we've been bearish from multiple levels. We held exhaustion up here at 266.23 to 48 with a 265.95 high. And rolled over to 219.92. A lot of other bearish formations in here. On 817, 827, more recently, we left a bearish reversal above. We've been bearish from 234.32 and have traded down to 219.92. As well, the trade below here at 232.21. Now, if we were to break above this line right here, decently to the upside, which is going to come in at 293.92 as of 6 o'clock p.m. and move down 0.5 of a tick per hour. Break above there, I get out of all shorts. I'd get long. I'll be looking for short covering back up towards this line up in here in the 233 area. Okay, the Brent came off hard today also. Bearish from multiple levels in the Brent. I'm up in here, a lot of stuff. Decent trade below 75, 50, 40, 53 should bring in decent pressure. We broke below there, starting to see that pressure. If we were to break back above that line decently, I would look for decent strength. That's going to come in at 75, 54 to 75, 58 through tomorrow. But the break below there projects us downward $5 minimum, possibly $12. Gas oil came off as well. Bearish in here for multiple levels up above. More recently from 802.50, traded down to 677.25. Trade below 741. Brought in, trade down to 677.25. So we're also on the verge of breaking below this formation right here. We haven't quite broke below it decently yet, but that comes in at 681.57. Bear with me a minute. -4 per hour, starting at 8 o'clock p.m. Eastern Standard Time. If we were to break below here decently and back up through it decently, look for decent short covering to come in. At this point, actually, it came very close to the stop below. If we broke back above it decently, I'd still get long, even if we didn't see the decent break below it prior. And for the spreads going into tomorrow, the gas is the weak one out of the three. And the heat, the strongest out of the three, with the crude in the middle. Okay, thank you very much for watching. I hope you have a good evening, and I'll see you on tomorrow's podcast.